Every year, news headlines from around the world seem to get more shocking than the year before, and 2019 was no different. There was the impeachment of a president, resignation from a major leaders, and political and environmental protests across the world. There was plenty of good news too, from advancement in space exploration to the arrival of new member of the royal family. When it comes to India's economy in 2019, the entire GDP increased by 4%, rising from 140 lakh 3000 crores to rupees 145 lakh 69,000 crores. But what actually GDP is? The gross domestic product is the market value of goods and services generated and consumed in a given period of time. It's a metric for determining the size of country's economy. GDP is basically divided into four categories: consumption, investment, government expenditure, and net exports. Now let's take a look at the GDP breakdown in 2019 and 20 to learn more about India's GDP distribution among sectors. The service sector provided 49.86% in 2019, which increased to 53.89% in 2020. The industry sector increased slightly from 24.18% to 25.92%. The agriculture, on the other hand, contributed 16.68, which also increased to 20.19%. Let us now compare India's GDP to that of a developing country, which is Singapore, and developed country, that is United States. Because of the epidemic, all the countries' economies were put on hold for a period of time, which was of course reflected in their GDP. In US for 2019, the GDP was 21 lakh 43,000 crores USD, and because of pandemic situation, it fell down to 20 lakh 94,000 crores USD in 2020. Singapore faced the same situation. Its GDP in 2019 was 37,438 crore, which decreased to 33,999 crores USD. And of course, India faced that situation also, and its economy fall to 2,62,000 crore USD from 2,87,000 crore USD.
Now consider this. If you're talking with your grandparents about the price of anything, they are most likely to say something. हमारे जमाने में तो हम 100 रुपए में पूरा घर का सामान ले आते थे. And many more things like that.
So what changes? How does few years back when people could buy whole ration in rupees 100 now not even afford one time meal? The answer is inflation. Inflation is the rate of an increase in prices for goods and services in an economy over a set time period. Consumer Price Index and Wholesale Price Index are two regularly used inflation indices. It is the rate at which a currency's value depreciates while the overall level of pricing for goods and services rises. The inflation rate and consumer price index can be seen as follows for all the countries. India's inflation in 2021 was 6.6%, while USA's 1.2% and Singapore with least minus 0.182%. If we talk about consumer price index, India's was the highest with 184.3, US was 260.46, and again Singapore with the least 99.7. The Gini coefficient and the Human Development Index are two other key aspects of country's economy. The Gini index, often known as Gini coefficient, is a measure of income distribution in a population. It is frequently used to measure income distribution or less usually wealth distribution among a population as a measure of economic inequality. Households are first organized according to the respective household incomes from the lowest to the highest aligned. The coefficient is a number that runs from 0 to 1, which is 0% to 100%, with 0 indicating perfect equality and 1 indicating perfect inequality. India's Gini index is 0.82, higher than the United States and Singapore's, indicating greater inequality with high income individuals getting significantly bigger percentages of the population's total income. India's economic development has considerably slowed. This is the time for government to invest. Money must go into the hands of the poor. Taxation is how states makes money. The obvious solution is to raise taxes on the affluent. A higher income tax rate for billionaires could help the state collect more revenue. Inequality can be found everywhere. It suffocates ambition and potential, and when it reaches a breaking point, people may turn to the streets. In the end, it harms economies and societies. The Human Development Index is a composite statistic index that classifies countries of human development based on life expectancy, education, and per capita income factors. As can be seen, Singapore's HDI is 0.93, which is higher than the United States and India's, indicating that life expectancy is longer, education levels are better, and GNI per capita is greater. India's HDI scores can be significantly improved if a politically committed government implements inclusive policies to improve public health, education, and nutrition, as well as to eliminate gender discrimination and usher in a more equal society. We were hit heavily by COVID 19 a few months ago. The stock market as well as the economy was down. Locals, on the other hand, who had no fixed income and were only paid on a daily basis, were the ones who suffered the most. As a result, the Indian government devised various demands and policies. The first one is Pradhan Mantri Swanidhi, which is Atmanirbhar Nidhi for street vendors. Not only do street vendors provide vital commodities, but they also fight poverty and unemployment. It is the government responsibility to defend these small entrepreneurs. This program was implemented to boost the economic growth of cities following the COVID. It is a government run program that began in June 2020 and will run until March 2022. Its goal is to provide microcredit to street sellers who have been affected by the COVID 19 outbreak. It will help street sellers who have been hit by the pandemic with cheap working capital loans. Vendors will be given an initial working capital of up to rupees 10,000 and will receive a 7% interest discount if they repay their loans early or on schedule. To get a loan, a vendor does not need to put any collateral. The major goal is to promote digitalization by rewarding vendors who choose digital loan repayments and incentivizing regular loans repayments through features such as cashback, larger loans, and so on. The next one is Emergency Credit Line Guarantee Scheme. Finance Ministry launched it in May 2020 to aid the pandemic affected economy. This scheme aims to give unsecured loans worth of rupees 4.5 lakh crores to Ministry of Micro, Small and Medium Enterprises and Businesses to help them cope with the effects of coronavirus induced lockdown. The main feature of this scheme are: first, 100% guarantee coverage for the additional funds section under the scheme. Second, businesses and MSME having an outstanding loan of up to rupees 50 crores as of 29 February 2020 and a turnover of up to rupees 250 crores in financial year 2019 and 20 were eligible borrowers. Third, bank interest rates are capped at 9.25%, whereas NBFC interest rates are capped at 14%. Fourth, from the date of payout, the term was extended for up to 4 years. The main purpose of this plan is to provide bank and NBFCs with 100% guarantee coverage so that they can issue emergency credit to business and MSMEs in light of COVID-19 to satisfy their additional term loan or additional working capital needs. The last but not least is Pradhan Mantri Jan Dhan Yojana. It ensures that the excluded section, that is, weaker section and low income groups, have access to various financial services such as basic saving accounts, need based credit, remittance, insurance, and pension. Only good use of technology allows for such deep penetration at such low cost. In addition, the recipients will receive a RuPay debit card with 1 lakh accident insurance cover built in. The plan also envisions directing all government's payment to beneficiaries' account and promoting the union government's direct benefit transfer system. Poor connectivity and online transaction will be handled as technology challenges. The scheme also intends to employ mobile transactions through telecom carriers and the established center as cash out points for financial inclusion. A concerted attempt is also being made to recruit the country's youth to engage in the mission mode program. Politicians, world leaders, and economists have all discussed what the optimum growth rate should be and how to get there. It's crucial to understand how an economy grows, that is, who or what are the players who push an economy forward. India's economy can grow in a number of ways, including boosting farm revenues, increasing government spending and investment in infrastructure, and urbanizing India's rural people. Of course, as we all know, India is still a developing country, and achieving the status of the United States will take time.